Questions from Terry. What is rent to rent and how does it work as an investment strategy? So I'll start this one off. So what rent to rent is, I know some of you lot will probably be thinking, well, isn't that subletting? It is if you do it wrong, basically. It's the change within contracts that you use. So you go from using an AST contract, which will be permanent residency, to a lease management agreement. So you're leasing the property. You're not going to be living there permanently. But what this does is it's through something called a company let or a corporate let. Whoever it is that you're speaking to, the pronunciation's different, the principle's the same. And how this is, you're going to go take the property on, and you might have a landlord that will want £1,000 a month. So you're going to guarantee him the £1,000 a month, but you're going to go and generate £2,000 a month. So you're going to pay the landlord what he wants, and you're going to keep the difference as profit. So that's a quick overall to rent. But the good thing about this is you can scale it up quite quick. You can get one of these from operational from 2 to 4 week deadline, and you can just keep scaling and scaling and scaling. So it's a really lucrative strategy. Now, there's different avenues you can go down with rent to rent. You can go rent to SA, service accommodation, where you rent the property out on a nightly rate on Airbnb and Booking.com. Or you can go rent to HMO, house of multiple occupancy, where you can rent the property out room by room to unrelated tenants as such. You can do this to students, you can do this to working class people, the professional people, or you can go down, assisted living or supported living side of things and be getting service users in, or, people that may have just come out of prison. There's loads of different avenues that you can go down. Childcare for one. There's loads and loads that you can go down with rent to rent, but that does come under more social housing. Social housing is quite lucrative. Because what we can go and do is we can go and find a property. Now it's normally in like higher units, so apartments of about 12 or so, and you're going to go marry it up with a housing provider, and you're just going to be the middleman because they're going to go and do all the tenanting, they're going to do the maintenance, they're going to do the management, so they're going to do the day-to-day operations within the property. All you've got to do is go and collect the rent from them each month and go and pay the landlord what he wants. So essentially, you're taking a higher margin in the first place because you're dealing with more units, so you're going to be gaining more money, and you've not had to do anything. You've just been a middleman. You could really systemize that if you wanted to. You could make sure they've got a standing order set or a direct debit set, and vice versa. So if you didn't really want to go and communicate with them to go and collect the rent, you didn't have to. But because it's a social housing provider, the rent that you're getting is guaranteed as such. Now, this can be done through charities. It can be done through various different things, the social housing side of things. And social housing itself is a massive conversational topic because there's loads and loads of different avenues you can go down. There's some very, very lucrative ones. But, we'll actually do a bit of a segment about social housing at a bit of a later date because there's so many opportunities, again, within it that people don't even realise. But how does it work as an investment strategy, the second half of this question? So how does it work? Basically, in a nutshell, there will normally be a lower startup cost unless you're going to use a deal sourcer to go and find you these properties for you. If you do, in that case, you're going to have to go and pay them for their services. But if you did decide to go and use a deal sourcer, what they'll do is they'll go out and source your requirements. They'll go and find you a property that matches exactly what it is that you're looking for, what return you want to make. They'll do all the negotiating. They'll get all the contracts sorted, and they'll just give you the keys at the end. So it can really, really cut out the first part of this strategy. And normally it just depends on a couple of factors, whether you're good at finding deals and whether you've got the time to go and find deals. So deal sourcer is always kind of a good option that you can put into the mix. But if you wanted to go and do it yourself, then you've seen what we said earlier about our apartment that was £2,900 to go and get up and running. I think we got an 8-bed up and running in Nottingham, actually, a HMO, and that was 3,900. So
300.
Three what? Sorry,
300.
Oh, was it? Well,
yeah.
no, even wrong. But what you can do with these is you can go and stack them up because they're a low initial cost to go and do.
That one's super lucrative as well. Super, super lucrative. Well, I can actually talk about this deal. So with our business, we actually specialised in a strategy called Rent to HMO. I know Tom's just explained it, but what we did is we went out and we found a ex-student property. And we decided, you know what, the student market is expanding and there is more supply, so there's more buildings being built. However, the professional market is declining. There is no places, due to the cost of living, no one can afford full market rent. So they're being forced to actually go into these HMOs and into these rooms. So we just took full advantage of that. And we decided, you know what, we found this deal. We ended up paying the landlord £80 per person per week. So that's per room. It was an 8-bed, so it was £2,771 for the rent. And then we ended up filling the rooms. We filled the rooms at £650 per room. And we had one room at £750. Now, we paid £670 a month in bills, so council tax, water, energy, and Wi-Fi. And then we profited £1,771 from that one deal. Okay, £1,771. That's more than the minimum wage in the UK, and that's more than what I was on when I was landscape gardening. So it's a super lucrative strategy, to say the least. And like I said, if you do decide to build a portfolio of them, it is not difficult to scale to that 5-figure a month mark. I mean, we did it at a rapid rate, especially when we learned the ins and outs of business as well.
Yeah, no, you're absolutely right. Like for us, our first goal was £10,000 a month that we wanted to get coming through, and we did that really quickly. So rent to rent, you can just scale up really quick. Is the whole point of what I'm saying.
Okay, so how much money do you realistically need to start when getting into property? And that question is from John. Now, if I'm being totally honest, it depends on what you're looking to achieve, and it depends on what strategy you're looking to go down. So realistically, you don't need anything to get into deal sourcing. You just need to get yourself educated. That is it. If you can get yourself educated, you're going to equip yourself with the skills to go out and find these high returning deals. And then you just need to get good at networking and get good at sales as well. Because then all you need to do is find a deal, network with investors, and then marry the two together. Okay? Now that's going to cost you as much as a training program is going to cost you. That is it, because you don't want to go into the market blind. But then if you're getting into rent to rent, yet again, you're going to need training beforehand. But for us, we never paid over £5,000 to get a rent to rent up and running. That's in the Midlands, bear in mind. Leicester, Nottingham and Coventry is where we mainly focused on. So it may be a little bit cheaper up north. It's going to be more expensive in London because rates are a lot more expensive. But it all depends on what strategy you're looking to go down. If you're looking to go into BRR, there's other ways you can do it. You can still do it with no money. You just have to go out and raise finance. But I couldn't give you a tangible answer to how much you're going to need to get into BRR because it depends on the deal. So you show me a property deal, I'll tell you how much you're going to need. But the answer is zero, because you can go out and raise the finance. You can go in joint venture. You can go and borrow the money. There's multiple ways you can do it. You just need to be smart about it. Tom?
Yeah, no, great point. There's again the common misconception that you need money to get into property. It's just not the case. If you really wanted to, you could go in. If you wanted to do a BRI, you could just go and raise the money.
Exactly.
You could theoretically, you could go and get an investor to go and give you the deposit for the finance, and then you can go and get the finance company to put the rest in. And there you go, you're no money down already.